Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick.
I'm Kevin McCormick, and this is my outlook for the fourth quarter of 2023. I'm expecting a big rally to end the year, and I want to provide you with all the details of how and when this rally will occur. As a reminder, this presentation is for educational purposes only. So if you didn't see my stock market outlook that was published back in July 4th, here's a quick recap of what we saw coming and how the market went exactly as we expected. We called for the rally to continue, but at the end of July, we saw clear areas that we're going to call the end of the rally and expect a market decline down to possibly 4,200 in the S&P 500. That's exactly where we are right now, and I called for all pullbacks were good buying opportunities if you needed to add to in your retirement portfolios. So where do I see things going now? Let's first take a look at the presidential cycle. I am a huge fan of the presidential cycles. They predict market outcomes with unbelievable reliability. And we had an interesting occurrence happen here for July, August, and into September. So now that we just had a negative August and September, this has only occurred 6 times dating back to 1931. And every time this occurred, we've had a huge rally in October. The average return is 5.8%. But then we have typically a calm November. So I think a lot of people are going to be surprised by the rally is going to occur. And we're going to see a lot of our fourth quarter returns in October this year instead of in November and December. The other interesting thing is the returns are better when we have a Democrat in the presidential executive office. And as you can see on my presentation here, this has occurred a lot, in the last few years under a Democrat. And you can see over here in October, these returns in the last 20 years or so have been great in the month of October when this scenario has played out. So another reason why we should be looking for a large positive return here in October, right here, right now. This is a slide from the presentation we did on July 4th, when we highlighted the fact that when the S&P 500 has a great first half of the year, we typically have a 12% return or better in the second half. But as we predicted, we had a pullback starting in the month of July, and we've just finished that. So we're set up for very large returns. It's crazy to think that a move up to 5,000 in the S&P 500 could be possible right here, right now. I mean, that's talking about a 15-20% rally. I think a good 10% rally off of the lows that we had to start the month of October would be great. And I think it's very possible it's going to be starting here next week. As I'm filming this, we just completed the first week of October. So for those of you that don't want to watch the whole video and see what the charts say to back this up, here is what I'm expecting for the fourth quarter of this year. We're going to have a rally that starts in October. It's going to continue through the year end. We might have a slight pause, sideways move in the month of November, but we're also going to see a decline in interest rates. In the 10-year and 30-year, interest rates will go down, and we're going to see a decline in the US dollar as well. So that's the outlook for the fourth quarter. Get ready for a huge rally and a chance to make great profits. Now, let's take a look at what the charts are telling us. We're going to start off by taking a look at the S&P 500 futures contract with the moving averages, and then we're going to discuss the seasonals. So if you'll see here, you guys have been watching for a while, we called this decline, this start, and then it bounced perfectly off the 100-day moving average. It looked like that was a good spot for the market to have its healthy decline and then continue the rally higher. But as we all know, that didn't happen. We actually had a little ABC wave correction that occurred here. So we came up and then came back down, broke through the 100-day moving average. And now, from a technical perspective, I don't use a 200-day moving average a lot, but there's a lot of big money out there that does. And you'll see here that we're sitting perfectly on the 200-day moving average, which is an area where we would expect to find support. This area of support is also colliding perfectly with some of the other areas of support, including Fibonacci retracements and old highs. So this is a very logical place for the market to bottom and find support from a technical perspective. Now, let's take a look at the seasonals. Here we can see that the true seasonal pattern, this is the daily true seasonal, has been working very well this year. And now we're getting into what we usually have as the seasonal bottom. But typically speaking, the rally doesn't start until the end of October. But that's where I think this year is going to be a little different, and that we're going to start rallying possibly in the middle of October and catching that big rally that we saw that it typically occurs in the third-year presidential cycle after you've had a negative September and October. But you can see here we had that great up day on Friday, but that just got us back to where we started the month of October. So this is just the beginning. I think we're farming a logical bottom right here. We have big CPI data coming out Wednesday, which could give us that all clear for the market rally. In addition to the support we have from the true seasonal saying we could start bottoming and rallying right here, right now, if we take a quick look at sentiment, it is still terrible. If you watch the talking heads on TV, the bears have come out in full strength saying, this is just the start of a huge decline. I disagree. And when we get into this negative area, you can see that this year we have bounced in the past. So what else do I think is causing us to have an outlook to say that the market is going to bottom right here, right now? Interest rates are going down and the dollar's going down. Well, let's go jump into the DeMark indicators and take a look at what they are calling for right here, right now. All right, we're going to start off by continuing to take a look at the S&P 500 futures contract using the DeMark indicators sequential and combo. You can see here that we've hit areas of support by the TDST line perfectly here. We had a new 9 buy setup and then a combo 13 and a sequential 13 just last week, right on time with what I'm expecting to be a large October rally. I will highlight here that I'm using combo version 2B for those of you that follow the DeMark indicators out there. It seems to have been calling the market a little bit better than I usually use the most strict version, which is version 1B. But you can see here that if combo 2B has a 13 right now, version 1B says that we could have a couple more days lower still. But either way, looking for a market that's bottoming and ready for a rally right here, right now. But that's not the only thing I like. If we take a quick look at the weekly chart of the S&P 500, you can see here that we're right in that past area of support here as well. And if we take a look at the ETF on a weekly basis, we have a similar setup there. So let's take a look at the NASDAQ as well. Is it giving us the same signal? Here you go. NASDAQ using the combo and sequential indicators. You can see here a little bit earlier, but we got that 13 bottom calling for it at the end of September. And now we have started that rally higher. We stopped at this level of support that was called out. And you can see here that these 13s have done a decent job. They were a little early back here. But this is version 2B as well. And then this was when we called for the decline in the July rally. So right here, once again, we have the DeMark indicator 13 calling for a bottom right here, right now in the NASDAQ and the S&P 500. They've lined up together, which is what I like to see from these futures contracts, is when these things are in line together. And so right now, it looks like we can start buying to get ready for the October rally, which is what we see from the presidential cycle and taking a look at the charts over there. So that's why I think that it's time for us to buy right here, right now, to catch the end of the year rally, which I'm expecting to be over 10% into year end. And we could have an enormous rally here in October, a little bit ahead of the seasonal pattern, which is key for us as traders. We don't want to miss this move. But I also highlighted that I believe that the interest rates are going to decline and the dollar is going to decline. There is a correlation between the stock market and the interest rates this year and the dollar. So why do I believe that? It's supported by multiple technicals, but we're going to stay here on the DeMark indicators, and let's take a look at the dollar index. You can see here that we had some 13s on these enormous rally higher, but here recently in the last couple weeks, sequential 13, combo 13, and a sell 9 setup occurred as well. And then on Friday, we had a confirmed price flip down lower off of this 9. So I'm expecting this decline in the dollar to continue. It just started last week, and this will be positive for the stock market and, more importantly, for all of our stocks and companies out there that get their earnings overseas, which is heavily that Magnificent Seven, as they've been called now, and our tech companies, lots of earnings overseas. If we take a quick look at the weekly setup in this as well, you'll see here we have a 9 sell setup on the weekly chart, which has been a great indicator of a top in the dollar, as you can see back here in October 2022. What also happened back in October 2022? This is when the rally in the stock market began. Coincide perfectly with the decline in the dollar. Another reason why I think we're set up for a big rally right now in the stock market. Dollar's coming lower, stocks are going higher. And to finish things off, let's take a look at the 30-year bond. You can see right here, right now as well, all of these things are lining up together. We've had exhaustion. This is in the price of the 30-year bond. Some of you might be looking at the yield, which will be showing higher, but it's giving you the same indicator. 13 buy signal for bonds, meaning that the price of bonds are going higher, interest rates are going lower, right here, right now, calling for that on a weekly chart. This is a weekly 13. So let's take a look at what the daily chart is telling us. Same thing, perfect alignment. We blew through this 9 buy setup and brought us right here to a sequential 13. We have a combo working back here. So these interest rates, I think, have topped out. Bonds are going to start moving higher, both the 10-year and the 30-year. And this is just another tailwind for our stock market rally, which I think is going to start a few weeks early in October. This is my outlook for Q4. I hope you have found this valuable. It's been a few weeks, almost a month since I've done a video. So for all my loyal subscribers out there, let me know what you'd like to see in the comments. If you want me to get back on to doing those weekly outlooks. And always, for anyone that's new out there, remember to hit like and subscribe so you can find out when all of my new content and special reports like this one calling for the stock market rally come out. Thank you.